Well, hello everyone. Welcome to Trading Price Patterns. My name is Barbara Armstrong, and I am delighted that you guys are all joining me here live today. We have James Boyd riding shotgun in the chat. So if you have any questions, please don't hesitate to type in and ask. Today, we're going to look at some short-term trading strategies, as in days to maybe a week, probably not an S on the weeks. So we're looking for just short-term moves in stocks, both bullishly and bearishly. So today we're going to be focusing on long calls and long puts with one ATR targets. And so that's what's on the menu for today. If you are not following me on Twitter, I invite you to do so, now known as X. Barbara Armstrong CS is my handle. James Boyd CS is James's handle. And James is posting a ton, as am I, but I just found two more imposters this morning. Know that no Schwab coach will ever reach out to you and offer you a Bitcoin deal, a crypto deal, private education for a fee, or most terrifying of all, we won't ask you if you would like us to trade your account on your behalf and split the profits. So never, give somebody access to your accounts. So having said that, glad that you're here. And just before we get out to the charts, know that options carry a high level of risk and aren't suitable for all investors. You have to apply for option trading privileges, and not all will qualify. Also know that we use the Paper Money software application on the Thinkorswim desktop platform. It is a brilliant place to learn and hone your skills. Make sure you understand your trading plan before you consider trading anything in a live account. Our focus on this class, it's called Trading Price Patterns, so it is a technical focus, but other approaches, including fundamental analysis, being aware of what's going on politically, both within our country and globally, looking at under the hood at fundamental analysis, being aware of earnings, all of that stuff helps us make more informed decisions. Okay. Okay, and one of the nuances or differences between Paper Money and a live account is that short options will never be assigned early, regardless of how far they are in the money, but that can happen in a live account. Okay, so let's get out and have a look at the charts. And there's one position that I wanted to review, and that was one that we did last week on IoT. And I had no idea that this was coming, but we did a buy right covered call on Samsara, also known as the Internet of Things, IoT. And we bought this 100 shares of stock and we sold a covered call at the 55 strike. And when we looked at it on this day, we said, hey, we have all but a thimbleful of what we can make. And the most we could make was $55 a share because we had sold this call at $55, and we weren't called out ahead of time because in Paper Money you're never called out ahead of time, but we went in and decided to exit the trade. And I remember saying, kind of tongue-in-cheek, don't think like there's no way it's ever going to come back below 55 by Friday. And then on Thursday it had a huge down day and then continued to fall Friday and Monday and Tuesday. And so here we are looking like it may have found a support level at the 100-day moving average. And so, you want to be careful that you don't end up snatching defeat from the jaws of victory. And so, when we came and we looked at this one, our Internet of Things, we had bought this January 31st. We closed it out last week. And we made about $350, or I think it was close to a 7% return on that trade. But I thought it was interesting, how prophetic that can be. Because I said, if you think that it will never, there's no way it's going to turn around, go to the bathroom and wash your mouth out with soap, because never say never. So anyway, that was our one trade to review. If you are not familiar with the one ATR trading plan, I encourage you to hit the subscribe button if you haven't already subscribed to this channel. And we're going to go, what subscribing to this channel does is it just gives you easy access to the Trader Talk Schwab coaching webcasts. And when you first get there on home, it will say what's currently playing. That will be at the top, but we're going to go to playlists. And I haven't done every trading plan that I want to do, but we have long calls with 1 ATR targets, a trading plan. And that's an 18-minute long video. If you've not watched it, you may want to check that out. I still owe you, so to speak, a long put with 1 ATR trading plan. I haven't done the companion strategy to that, if you will. However, yeah, stay tuned. I did just add this one, an example trading plan for stock investing, and it's a simple kind of trend trading growth stock investing plan. So if you haven't checked that out, that just went up on Monday. Okay, so let's get out, and I'm pointing this out because we're going to talk about this 1 ATR strategy. Now, someone said, hey, should we do another buy right covered call on Internet of Things? And we could, but in our example trading plan, we don't want to trade that over earnings. And the 6th is coming up pretty soon. That would be next week. And so we're going to pass on that until we get past earnings. But then might we do a wash, rinse, repeat? Hey, anything is possible. Okay. Okay. So yeah, but here, when we look at this earnings, it may have beat on earnings, but look at what happened to the stock afterwards. So, okay. So we are going to come and look at Fox. And so Fox is in the communications sector. We've looked at a lot of stocks in this sector recently because it tends to be a little more trade tariff agnostic, if you will. This is a 1-year chart, and this is a stock that's gone up by, over 100%. And today's hitting, a new 1-year high. And, could we say, hey, we just want to be conservative? And could we buy a call and say, if it goes up, 1 ATR, and if you don't have this on your chart and you're saying to yourself, I don't even know what this 1 ATR means. Well, ATR is average true range, and you add it to your chart really easily. Just come to Edit Studies and type in ATR and just hit Add Selected. Now, we already have it on the chart, so I'm not going to add it twice. But if you want a really comprehensive definition, if you click on this little question mark, it will give you a pretty detailed definition. But basically, it's saying we're taking the average amount this stock moves from the high of the day to the low of the day over the last 14 days. And we're saying that's how much this stock moves on average, over the last 2 weeks in a day. And for a Fox, that's around right now about a $1.15. Now, if we look at the example trading plan, it will say, does this stock on average move a million, trade 1 million shares a day? Well, if we look at yesterday, that was close to 1 million, 1.3 million. So yes. But when we look at the options are only monthly. And so that's often a sign. And then when we look at the bid-ask spread on those options, you could drive a truck through that. Like, we'd want this number to be, the bid-ask spread to be no more than about 10 cents apart. And what are we looking at? We're looking at 40 cents apart. If we come out to April, which is actually the time frame we'd be interested in, we've got 60 cents apart, and we really don't want it to be more than about 40 to 50. And so sometimes we may see a trade setup and say the setup may be there, but it doesn't meet our guidelines. And so there may be some guidelines that we're willing to move on, but with Fox, we might prefer to just buy the shares if we wanted to do a trade on that. And our thought today was that we're going to focus on this 1 ATR strategy. And so for that reason, with the bid-ask spread being too wide, we're going to pass. we're going to come and look at something else. Today isn't totally sponsored by the letter F, but our first two stocks that we're looking at, are both stocks starting with F. So when we come in and we look at Fortinet, here's another stock that's gone from, a low of $54 a share back in August to recently hitting a high of 114, and then it's pulled back. And so if we're technically playing I Spy, some might say, well, it looks like we've had a series of kind of bull flags here. Some might look at this configuration and say, well, if we're doing the I Spy thing, what do I see? I see this morning star pattern where we had a down day, then a day of indecision, okay, and then an up day. And so this is a 3-candle pattern, and that's considered to be a possible trend reversal pattern, okay? And so could we look at that and say, hey, could we do a swing trade? It's at 109. Could we trade it back up to 115? We could do that. Yeah. And Thea is pointing out, and I love that that, like, we also have a close above the high of the low day. And so if we're looking at this as a longer, as a bull flag pattern, today was the low day, and today it's currently trading at least above the high of the low day. And so if we looked at Fortinet and we said, and I'm going to come over here to our calculator, and we're going to turn that into our scratch pad. And this is Fortinet 1 ATR, and the 1 ATR on this is $3.12. And our target on this is going to be today's high. Now, some people will go from today's high, and that's just one way to do it. Others will say, I'm just going to go from whatever the current price is. But to that, we're going to add the $3.12. So going from the high of the day is a little more aggressive. So that would be 113.41. Feel free to double check my math. I know you guys are great at that. And then our exit would be today's low, which if you hover over the candle and look in the top left part of the chart, 107.83 is today's low. And then we're going to subtract $3.12. And that's going to give us 104.71. So if we want to put our target on the chart, now, once you put the order in, you can have your order show on the chart as well. But our target is going to be 113.41. And why might we trade this strategy as opposed to a longer term strategy? Well, if we're concerned about there being volatility in the market, or maybe we just want to do some income generating strategies because we'd like to be able to withdraw like $100 a week from our account or whatever. This is, we treat this as a companion class to the trading a smaller account class on Mondays and Fridays. And so when we look at this, how many contracts could we do? And so if we come out here, and I left the weeklies up, and why did I do that? To just see, because 23 days is getting a little short. But we do have, a 10-cent bid-ask spread, so that meets our parameters. But if we wanted to come out just a little further, we'd have to come out to April. And you might say, but you said we're just going to be in this days to a week. But, and I did say that. But if we come and we look at theta is now, if we look at it at the money strike, 9 cents a day on a $3.50 option, where here, like if we looked at a $3 option, it's 5 cents a day. Like it's a lot less. And so this is why we're giving ourselves some more time, so that we're not expecting to need to use it all, but we're trying to limit the damage from time decay, because it's just kind of like death by 1,000 cuts. So So we're going to look at, and we could choose either one of these strikes. We don't want to risk more than $500. So we could do one contract here at the 110 strike. It's already trading at 109. So it's almost at that 110, but we just want to take advantage of that short movement. Okay, so we're going to buy a single, and then we're going to come to single order, first trigger sequence, because we're putting in an OCO order. And when you're customizing both orders, this is just a faster way to do it. So we're making this a market order, good till canceled. And then when we bring up our sprocket, I always put the target in first, and that's just habit. If it goes at or above, when it gets at or above 113.41, we want to exit. Or if it goes below 104.71, we want to exit. Okay, save, confirm and send. And then what I like to do, because being a human being, we can make mistakes sometimes. So it's like, okay, the current price is 109.18, right? I want to get out if it goes $4 above that. Yep. Or about $4 below that. Yeah. Max loss, $515. Does that honor our position sizing rules? It does. It says max profit is infinite, but we know that this isn't designed to be a grand slam or a home run. This trade is designed to be a base hit. So if we said, okay, our target is for it to get to 113.41. So let's put this in our long call. And then if you look at that example trading plan, at the end of the trading day tomorrow, so when we meet again on Friday, we'll adjust the stop. If it doesn't go up and hit our target tomorrow, we'll adjust the stop up to 50 cents below the low of the low day. Okay. So we're going to adjust that stop daily, because this is where we have the most risk, is when we first place the trade. But if you're saying, well, how much, like if you wanted to guesstimate how much we might make on this trade, we have a little tool here, which I thought was the coolest thing since sliced bread when I first saw it. And it's Theo Price. And so, I also thought it was the coolest thing since sliced bread, but then sorry, I've been posting stuff on Twitter or on X, but then I couldn't find it again. And I actually called the trade desk and said, I saw this really cool thing and I don't know what tab to go to. So we're on the trade tab, we're on the option chain, and then we come over and we pick Theo Price and Mark, which brings up this next box when you choose this. And I'm just going over that because the first time I saw it, I couldn't remember where to find it again. Could just be me. And the first thing we want to do is hit reset. So it's now February 26th, and we're saying, hey, it's Wednesday. What if this went up by Monday and hit our target? And so by Monday, let's say it's gone up by $5. Okay, so that would be 114.30, and our target, okay, $5.20. So that would trigger our target. So if I look at this option, it's saying, hey, we paid around let's call it $5.20 to get in. It might be worth around $8. So how much would we have made? About $2.80. And that's not taking changes into volatility into account. If we get out Friday and it hits the target, we might make a little more. If we don't get out till a week Friday, time decay will have been ticking along a little longer. But if we made around that, say $2.80 on an investment or a risk of 520, that'd be about a 54% return on our investment. Now, what about the other side? If it goes down and hits our stop? Well, our stop was at about 105, 104.71. So if instead of going up 520, what if it came down 420? So that would be, it's got to come down a little more than that. 460, 104. So this would have triggered our stop. And now we're looking at not quite a 50% loss, perhaps, like, we're talking ballpark figures here. So, we could be up 50%, we could be down 50%. And, as we adjust our stops, that will change. Are there any questions on this? Yes. Now someone is saying, hey, I look at this and it's still below the 10-day moving average. And so one of your guidelines may be that you don't want to place a bullish trade if something is below the 10-day moving average. And you can do that. But, when I kind of look at this chart, and this is just a chart I've zoned in on, so we don't have the whole month, but coming back to last September, this 30-day moving average has largely been acting as a support level, hasn't it? And it's certainly above that. Okay, so there's our first example trade. Okay, how about we look at Netflix? Now, do we see something similar in that we have a stock that's certainly been uptrending? It's up, almost 100% in the last year. It's gone from 540, it hit, 1,064. So it would have had to hit 1,080. So it didn't quite get there. It's currently sitting just under the 1,000 at 988. But, when we look at this, and when I looked at this a little earlier, it was more of a bullish engulfing. And some might say, from a candle pattern, is this more of a piercing line? But we have a big type of hammer here. And could this have found a support level? Now, what's our problem going to be on this one? 3 guesses and the first 2 don't count. What's the price of this stock? $988. Yeah, we went to the April expiration, Carla, on the last example trade. So if we come out here, even if we're looking at this March 28, and let's come back to we've got lots of contracts here. We have a bid-ask spread that meets our criteria. It's traded 2 million shares a day, but look at the price. Even if we go way out of the money, this is $15 a contract, and at the money strike is $30. That's a $3,000 risk. That is just, it's not in our snack bracket. So if we wanted to place a bullish or a bullish to neutral trade, could we do a short put vertical? Yeah. As an example trade, say something around that 970-ish. Could we do that? So if we came out here, and here we might want to look at 23 days where it's a selling strategy, and volatility's been higher the last couple of days in the market in general. Volatility on this expiration is at 33%. So would there be enough money for it to be worth our while? We've got lots of contracts here. A bid-ask spread that's about 70 cents on a $20 option. So that meets our criteria. We get $1.77, and there's an example trading plan for the short verticals as well. So if we come here and say, okay, this is the most we can make. Oh, now $1.95. $1.95 divided by 305. That's a 64% potential return on our risk. And we've got, $19 worth of wiggle room. So I call this a kind of sort of bearish trade. As long as it stays above 970, then we should end up with a profitable trade. But if it goes below that, then we could be in trouble. Excuse me, let me have a quick drink here. Look at that. Just a minute ago, it was like the price is going all over the place. So if we say, okay, as a guideline, we'd like to buy it back when we've got 80% of our max gain. So if we said, okay, if this gets to the point where it's worth about 40 cents, let's buy it back. Now, if we get together on Friday and that we've already got 50% of our max gain, or on Monday and we've not even been in the trade a week, do you think we might just take the money and run? Absolutely. This is just a guideline and we can go in and change it if we like. Okay, so the prices, keep changing. So let's just go ahead and put this in as an alternate to, it's another shorter term trade, but we're, likely to be in it longer than we would a 1 ATR trade. But this is something we can do in lieu of our 1 ATR trade when we just can't afford it. And the position sizing rule is a rule that we don't break, right? Right. So somebody's asking what the 305 was. So if we come in here, so we have this one teed up. So now it's sitting at $1.60. So if we look at this, how much can we lose? Because we're selling a put and then buying a put to define our risk. So the most we can lose on this trade is this $5. Let me just get my drawing tool set up here. Is this $5 minus what we got paid to get in the trade. Now the price keeps skipping around. So if we subtract $1.67 from the 5, now that would be what, $3.33? When I first did it, it was at $1.95. So then this number would have been $3.05. Okay. So if we're risking $3.33 and the most we can make is this $1.67, if I divide that by $3.33, our potential return on risk is, I'd say it's about 50%. If I $1.67 divided by $3.33, oh, it's 50%. It's 50.15. That's our return on risk. And so if you're new to this strategy, I'll put a link in at the top of the playlist. There's one on the basics of options, and there's a 12-week series. Okay. Yeah. And John is saying it's hard for me to take the money and run and leave some of the money on the table. And when you just have to have practice snatching defeat from the jaws of victory enough times that you say, you know what, it's not worth hanging in there for an extra $10 a contract and perhaps give up this nice gain that I've had in a short amount of time. And so these are the conversations we have to have with ourselves. And this is why having a trading plan, where you've made that decision on when you're getting out before you get in, can be really handy. Okay. Okay, so we have that one in. Let's see if it's gone in. So yeah, so we've got our long call on Netflix and then our short put vertical. So the Fortinet trade is more directional in that it has to go up, and it has to go up within the time frame we're looking for, or it won't be profitable. With Netflix, it just has to stay above 970. Okay, let's go look at a bearish example now. So let's look at Comcast. So with Comcast, we can see here's our 100-day moving average, this black line. This looks kind of like a run that my son really likes at Alta. It's just this sloping downhill, right? And then since it hit this 45.31 back at the end of October, I mean, man, this thing it's been on the struggle bus. And this 30-day moving average which it broke below with great, oomph back on December 10th. It's barely made it back above. It spent 1 day since December 10th back above that 30-day moving average. And that turned out not to be a breakout, but a fake out. And then it gapped down on the last earnings as well. And I went and looked, you can have live news up as a feed. And what I was just looking at is sentiment here. Are analysts raising price targets or lowering? Well, Daiwa lowered their price target from 45 to 38, Argus from 50 to 43. So it looks like the sentiment is, lowering price target. Barclays 237 from 42, Macquarie 42. They all seem to be lowering their price targets. And that's had some downward pressure on this stock. And so could we do a swing trade? Well, we could, back down to this 3250-ish area. Or could we say, hey, you know what? In an average day in the last 14 days, this thing moves about 79 cents. So, how about if we look at this and say, if it was to move about 79 cents to the downside, and, could we have placed this trade on Friday or Monday or Tuesday? Well, today's Wednesday, it's falling again. We could have. I mean, today, though, it's breaking back below that 30-day moving average, which if you're trading conservatively, you may have wanted to wait for. And so we're going to switch back to our scratch pad. And here's our bearish example. So there's Fortinet, which was bullish. And we're going to look at CMCSA. Our one ATR on this is about 79 cents. And our target is going to be today's low. And so if we hover over here, today's low is 35.03. And we're going to subtract our 79 cents from that. So 35.03 minus 79. So that's 34.24. And then our exit would be if it goes up in the other direction. And so if we look at today's high and we say, okay, the high is 35.83. If it goes up 79 cents above that, we want to admit that it's not going in the direction we were expecting and call it a day. So 35.83 plus 79. So that's 36.62. And so we're just looking for a relatively small move one way or the other. So our target on this is 34. You can just draw a line anywhere and then say, here's my one ATR target. And it's going to be 34.24. And so it will trigger a market order to sell. Now, if it gaps down, we could end up getting out at a more advantageous price. And if it gaps up, we could end up losing more. So that's why we position size based on the possibility of losing 100% of what we invested. And that's why we don't break our rule on, position sizing. And so if we come out, this is a less expensive stock, obviously. And so if we come out and we look at April and we look at this 35 strike, so the first strike, we're coming over here. Our first strike out of the money, it's about $1.15 to $1.17, 2-cent bid-ask spread. So that meets our requirement. 7,000 contracts, 700 traded just today. So that meets our requirement. Traded 14 million shares today. So it's like check, check, check on those requirements. And how many could we buy? Well, we could buy 4 and we'd still be under that $500 max loss level. So we're looking to buy 4 and then single order, first trigger sequence, right click, opposite order. And we're going to make this a market order, good till canceled. Click on the sprocket. We put in our target first. It's if it goes lower than at or lower than 34.24, 34.24, or it goes below or goes above 36.62, not going in the right direction. But we want to admit when we're wrong quickly, right? And so because this is a $34 stock, when we adjust the price on this one, we'll snug it up to 20 cents above the high of the day. If it doesn't go down and hit our target tomorrow. So if we scroll down here, we can see 34.24. Yep. 36.62. Yep. So it's got those numbers in there. When we get to confirm and send, it's like the target is if it goes below 34.24, it's at 35. So that's good. Or if it goes above 36.62, that makes sense. And we're going to come down and put this in our long put group. And I'm going to put a note in here that this has a 1 ATR target and exit, because we will manage this differently day to day than we manage a swing target, for example. And then how much can we lose? $468. So is that less than our $500 guideline? Yes. And this one does have a max profit because the lowest it can go is 0. Now, the probability of it going to 0 is pretty low, but it's possible. And again, you know, if we come to that Theo price, we could say, you know, get an estimate on how much we might make on this. But if we take a look at, say, the 30 strike, it's saying there's only a 7% chance here, or an 8% chance of it being in the money come April 17th. So the odds of it going to 0 are pretty low. Only a 16% chance of it coming down and hitting the 30 strike. So we just want it to move down a little bit. You know, how much? 80 cents is our expectation. You know, and that's what that looks like on the chart. Okay. I'm just looking at, can studies get loaded up to a paper money account or just a regular account? So if you're going to the scan tab, studies only can be loaded on a live account, not on a paper money. Okay, so that's on the scan tab. Okay, if you're looking to add money to an account, you can come to any position and right click, and then you can adjust cash. And this you can only do in paper money. You can't do that in a live account. You can add or take away as much as you like. Okay. Okay. So there we have it. And so we've done 3 trades here today. We bought a call on Fortinet, which is bullish. We bought a put on Comcast, which is bearish. And then we did a neutral to bullish trade on Netflix. We also reviewed the Internet of Things. And then we looked at Fox, which may have looked appealing, but barring the purchase of the stock, because of the options, the bid-ask spreads, we decided not to trade that. So guys, that's a wrap for today. I encourage you to follow both James and I in the land of Twitter or X. So Barb Armstrong CS, James Boyd CS. Please hit the like button on this webcast. What it does is it helps move things up in the algorithms. Okay, so if you'd hit the like button, it also sounds like applause to James and I, so we appreciate that. And then last but not least, subscribe to the channel. I don't believe that there was a survey today, so I think you're off the hook for that. Just let me quickly scroll up. Yeah. And someone asked how I chose the stocks to look at today. I quickly whipped through all the stocks listed on the Dow, and then I just have a list. But you can run scans and searches. That there are all kinds of different ways you can come up with examples to trade. But I've linked my chart to the watch list, and then you can very quickly click from one to the other, and look for a specific type of opportunity. Okay, so that's a great way to do it. Okay, guys, thank you very much for joining me. Have a really great rest of your day. I'll see you tomorrow afternoon for Trading After Hours. James Boyd is up this afternoon. You'll want to be sure that you don't miss James. Take care, everyone. Bye for now.